Hello everyone and welcome to my weekly update with me, Richard Perry, market analyst at Hantec Markets. Each week I take through the key events I believe will be driving your investments in the coming days. Now, moving into this week, we've had a lot of central bank decisions. We've had the Bank of Japan, we've had the Bank of England, and the Federal Reserve all reporting monetary policy. Didn't really do a great deal to shift the expectations on the Fed. However, you've got the Bank of Japan, which tweaked around with its yield curve control a little bit in the band around the zero level, and also we had sterling, which has been a big mover on the Bank of England, not higher. It had an interest rate hike, but the Bank of England didn't really meet the expectations and sort of didn't really have a move that impacted positively on sterling, because we had the fact that Brexit remains a key political factor, and the Brexit negotiations are not progressing especially well, certainly given the news over the weekend from UK Trade Secretary Liam Fox, who suggested chances of a no-deal Brexit were perhaps as high as 60%. We've had some significant selling pressure coming through sterling, back below 130. So a big move to the downside, and that is sort of is showing that the market really doesn't trust that the Bank of England is going to be able to move ahead substantially with the tightening cycle. Now, we've had also over the weekend sort of the escalation of the trade dispute once more, suggesting that China are preparing a retaliatory package of tariffs on US goods, and that just ramps up the aspect more on the fears over the trade war. Now, I think it's interesting that we've seen treasury yields which have not really moved. However, you've seen that the dollar is strengthening, and that comes as the markets move their assets out of emerging markets, out of Asia, out of China, and in towards the US. It's interesting that the Chinese yuan continues to slide, and even though the People's Bank of China has tried to sort of restrict that slide by increasing the reserve requirement ratio on FX forwards, it's interesting that the yuan continues to fall, and that is helping to strengthen the dollar. Now, that puts focus, I think, this week on some key aspects of Chinese announcements. We've got not only the trade balance, but also FX reserves. Are the FX reserve in decline? Is the People's Bank of China really having to battle hard to try and prevent the yuan from declining? Now, that'll be interesting, I think, later this week. Now, you've also got US inflation, as you can see here on the chart, inflation data. We had on Friday the average hourly earnings, which again 2.7% subdued, but we've got CPI on the headline basis, which is expected to possibly even go to 3% now. So we're seeing that CPI is above average hourly earnings. That's not great for the consumer further down the line. So it's interesting that treasury yields and sort of the expectations on how inflation are moving, not sort of especially going high on the treasury yields, even though the inflation levels are just starting to pick up again. So that's an interesting factor to look out for on Friday. Now, in terms of your Forex markets, we've had the euro, which is under a little bit of pressure following on from the ECB a couple of weeks ago. No real sort of shift in monetary policy, very much of a sleepy meeting there. Similar sort of meeting, I think, from the Federal Reserve, really, but I think the strength of the dollar is pulling the euro dollar lower. Now it's not a million miles away from the bottom of its range over the past few weeks, and 115 big figure is a key level on a support basis. If that's broken, that really does change the outlook for the euro. We've got sterling, which, as I said, remains under pressure below 130 figure, below 129.55, which is the July low. It then opens 128.50 and 127.70. So levels to look out for the downside on sterling, because it doesn't look at the moment as though it's stopping. Dollar yen, interesting mover on the yen, because the yen is slightly more of a better performer than other forex majors against the dollar. Yen is slightly sort of pulling the dollar yen sideways now, and we could be on the brink of breaking an uptrend, which sort of puts you more into a neutral trading pattern, I think, for dollar yen. So look out for the support at 110.60 on that dollar yen, because if you break it then it starts to suggest the yen is strengthening. We've also got the Reserve Bank of New Zealand and the Reserve Bank of Australia both to report this week, neither of which are really expected to do a great deal. Now, in terms of the indices, we've had a strong earnings season from the US. Over 80% of companies beating estimates. You've got 24% earnings growth. That's pretty decent numbers in anyone's book. However, is this sort of coming to the stage at which the market is priced all this in? We've had a decent rally on the US markets on Friday, holding up on the S&P 500 above 2790 to 2800. Needs to now break out above 28.72, above 28.40 to really gain sort of momentum towards 28.72, which is that all-time high. In terms of European markets, they are relatively underperforming because you've got the certainly on the DAX, which is an export-heavy index, that gets hit time and time again whenever the trade dispute comes up. And again today we're seeing that to the downside, sort of fluctuating around 12,600. That's a medium-term pivot level. Although it's lost its sort of support and resistance aspect, it's still a fairly decent near-term gauge, I think, for the for the DAX. And I think that if the DAX, sort of the two levels to look out for initially are 12,700 on the resistance, 12,493 on the support. So if it sort of breaks either of those two, we could see some direction. FTSE 100 range bound really, between 7,800 on the upside to 7,500 on the downside. Commodity prices, the dollar is again a key factor here. We've got the gold price, which is under pressure, still moving down towards those 12-month lows. 1204 was this key support that held as a floor, but it could come under further pressure. Certainly seems as though that Treasury yields being, say, around that 3% on US Treasury 10-year yield, not really all that great because it's not a great risk-reward basis for the opportunity cost of holding the zero yielding gold there, is it? So we're seeing gold under pressure, and again we're seeing that the markets seem to be selling that into strength. Oil price seems to be playing out on a supply basis rather than a demand basis at the moment, and the supply of oil from the US, Saudi Arabia, and any sort of movement around those the supply and production issues, I think tend to be sort of seeing the oil price fluctuating. Seems to be a little bit range bound for the near term, and needs to hold above 67 on WTI as that key base of support, and 71 at 30 is the equivalent on Brent crude. So we've got those key economic releases for the week. As I said, China focused, but also we've got the US inflation, a couple of central bank meetings for the RBNZ and the RBA, but mainly I think China and the US remain the key drivers. So I wish you good luck in your trading this week, and I will speak to you again next time. Thank you.